We have no apologies, Councillor Davies, but we are still waiting for Councillor Ball. Thank you.
Yeah, we know he's trying to join us, so that hopefully he'll join us soon. Okay, moving on to item number 2, which is declarations of interest. Members are invited to declare any personal or disclosable pecuniary interests, including the nature and extent of such interests they may have in any items to be considered at this meeting. Do we have any declarations of interest? No, that's good. We'll move on. But obviously, if anybody suddenly realises there is one at any stage, then please make us aware. Item number 3, items requiring urgent attention. There's none that's been brought to my attention, so there's no matters of urgency. So move on to item number 4, which is confirmation of the minutes of the meeting held on the 21st of July 2020. These have been circulated. Is everybody in agreement? It's probably easy to say, is there anybody who's not in agreement? Okay, I'll take it that those minutes are accepted. We now move on to item number 5, which is a Grant Thornton report. The accounts, the audit findings for West Edinburgh Council. I note that we have Jackson Murray and Steve Johnson with us from Grant Thornton. So can I please hand over to you to present the report?
Yes, thank you, Chair. So I'll talk through some of the headlines and then allow Steve to go through any more of the detail, and then we can take any questions at the end of the report. It would be a bit remiss of me not to mention COVID-19, given that this is the first time that either ourselves or the council have had to go through the process of closing the final accounts and also auditing the final accounts fully remotely. So we've not been to the council offices, we've done this via screen sharing, video calling, etc. The council have been very responsive to that. I think it's no surprise that in some areas that approach has taken longer than it normally would have if we'd been able to go and speak to council officers. That being said, I think it's been a responsive attitude to audit queries, and we've been able to progress the audit to the position that it currently is. Now, nationally, the timetable for production of the accounts and audit of the accounts was extended by due to coronavirus. So we are still awaiting completion of some of our procedures, including a receipt of assurances from the pension fund auditor. The list of items outstanding is shown on page 3 of our report that's entitled Headlines. So we've not yet fully completed the audit, but we have completed a large number of our testing procedures. The headline messages are subject to those outstanding procedures. We propose to issue an unqualified opinion on the council's financial statements, but we will be including an emphasis of matter paragraph in our audit report, which is different to what we would have done last year. And that's in relation to material uncertainties with regards to valuation of land and buildings and also investment properties. Now, I'm keen to stress that this is a national issue related to COVID-19. The council and the council's valuation experts have followed the national guidance that was issued by RICS, the Royal Institute for Chartered Surveyors, in valuations, and RICS set out that due to COVID and some of the market uncertainty that COVID brought about, valuers should report their year-end valuations on a material uncertainty basis. So therefore, the council disclosed that in their financial statement, and in our audit opinion, our audit report, we will draw the reader's attention to that note. So that our opinion is not qualified, but the emphasis of matter paragraph is something that hasn't been in the opinion previously. So I just wanted to draw that to the committee's attention. As I said, that's being included in all local government audit opinions, and indeed we included it in our NHS audit opinions that had material land and building valuations as well. The other part of our responsibilities then relates to value for money, and we've concluded during our risk-based review that West Edinburgh Council does have proper arrangements to secure economy, efficiency and effectiveness in its use of resources. We've looked at the medium-term financial plan and strategic financial planning. Clearly, again, COVID has had a very significant impact on financial planning, and the council continues to assess shortfalls it may have as a result of increased expenditure or reduced income related to COVID. Some of you may be aware, I think the Prime Minister earlier today has announced a further tranche of funding that will be made available to local government as well. So that's an area that continues to evolve and change, but we were satisfied that the council has sufficient and proper arrangements in place. So we will also be proposing an unqualified value for money conclusion. And the final element then, we've not exercised any of our other additional statutory powers or duties, and subject to the satisfactory completion of our final outstanding pieces of work, and also once the National Audit Office have issued the audit guidance in respect of whole of government accounts, we will then be able to comply with those procedures and issue our audit certificate, which effectively close the audit for the 2019-20 financial year. Those are the key headlines. As I said, I'll pass over to Steve now to go through some further elements of the report, and I'm happy to take any questions on anything that we've included in that at the end.
Thank you.
Steve, are you still there?
Sorry, I keep forgetting to unmute. Yeah, if I could pick up on some of the detail. On page 9 of the agenda, we set out the work on the valuation of the pension fund liability. That work is still ongoing. We've concluded everything that we can do at the moment. We are awaiting the auditors of the Devon Pension Fund to conclude their audit, and they respond to queries that we've raised over their processes and their management of West Devon's share of the fund. And until we get those assurances, we cannot conclude our work. I spoke to the Devon Pension Fund auditor this morning. They have some particular valuation problems along the lines that Jackson's just alluded to. They have some complex investments which need separate valuation, and they also have an uncertainty element over their valuation of property. They're hoping to conclude that audit by the end of the month. And until that point, Jackson's unable to sign the opinion because we need those assurances to add to our work. If I go on beyond there then to the next one, the valuation of land and buildings, the other significant risk that we identified initially, that is principally concluded now. We've just got one or two bits to finally review off to make sure we've covered all the angles. So that's virtually complete now. And again, we've got no issues to raise with the committee over that, other than, as Jackson's already said, that there is a material uncertainty that we have to refer to in our opinion. If we go through the report, then pretty much green, the investment properties, we completed our work on that area and the valuation of those. Page 14 sets out the estimation in the assumptions that were included in the pension fund liability, and we're comfortable that they're all within the parameters. And once Jackson has the file again, that will be concluded on those estimates. If we go then towards the back of the report, going concerns to page 17. Sorry, I nearly skipped over that. We are required to look at going concern, and as we set out in the plan, in a lot more detail than we would have done in the past. And we've done considerable work with Lisa on that. We conclude that we're happy the council will still be here in 12 months' time. Other pages set out the responsibilities, etc. Page 20 looks at the value for money conclusion. The next few pages, page 22 and 23 of the agenda, set out the work and our findings on the council's position. And again, as Jackson's already said, we're comfortable that we can give a clean opinion on the value for money conclusion. We set out elements on page 24. The only piece of non-audit work that we undertake is the housing benefits claim. And again, that deadline has been deferred until the end of January, but we will be looking to start that work towards the end of October and November. We have an action plan on page 25 that picks up a couple of the points that we've raised during the course of the report around the value for money and the going concern. The management have added elements of the additional elements to the annual government statement, which should helpfully expand the information that's contained within there. And finally, we get to the audit adjustments page, which is probably more than we would normally have been reporting. We have looked at things in a lot more detail this year. Most of these things are minor. The one thing we would like to draw your attention to on page 29 is the treatment of the CCLA investment as a long-term investment. We consider it a short-term investment. The amount for West Devon is not material, and the adjustments in the year and the treatment of those are quite small, but we are currently in disagreement with management over how that should be treated. It does not affect the bottom line of the revenue account, nor indeed does it impact greatly on the balance sheet. It's just where it's shown in the balance sheet that's in dispute. We set our fees on page 30, and then the opinion. So I'm happy to take any questions on the report.
Okay, thank you, Jackson and Steve, for that fairly detailed report, actually, because I must admit I've got lots of questions written down, and I think you've actually answered quite a few of them. But I'm going to ask members for questions in a moment, but I just wanted to just pick up very quickly. I think you answered it, but you both answered it, really. On the material uncertainty area of land and buildings and investment properties, obviously it's all been, the guidance is by RICS, so we accept that. You mentioned it's actually, making sure I did get this right, that actually the risk that you've entered in there for us is actually entered into all councils, is that right? It's not just us, it's all councils. Can you just confirm that?
Yes. Yeah, that would be correct. So if not all, the vast majority of councils' valuers have put in a material uncertainty, and as auditors, if the valuer hadn't put in a material uncertainty, we'd have been questioning why that was, given on the basis of national guidance by their professional body. They were expected to put that material uncertainty into their valuation report. So yes, all of our audit opinions will have the same narrative in there around that emphasis of matter.
Yeah, thank you. I'm sure most of our answers is going to be something to do with the uncertainty of COVID-19, but we'll press on. Councillor Vachon.
Yeah, thank you, Chair. I'm probably showing my ignorance on this one, but I noticed that under the audit risks, we've got other audit risks, and there's no reference to the IFRS 16 implementation, which has been delayed. And it was just, as I say, I'm not really certain what that was about, but has that any impact on this report today, or is that going to be, as I say, deferred, and that won't actually start till next year's accounts?
Yeah, I'll pick that one up. Yes, in our audit plan, we were expecting the IFRS 16, which is the presentation and valuation of leases, principally, to affect the 2021 accounts and the comparatives for 1920. So we were expecting that management would have to do a fair bit of work and present the potential impact of that change in accounting standard in this year's accounts. Due to the COVID situation, that was deferred another year. But because we raised it as an issue in the audit plan, we have to refer to it in the findings report. We can't just drop it. So it doesn't have any impact on this year's accounts.
Okay, thank you very much.
Okay.
Councillor Ridges.
Yes, should I just show you I'm here? One thing that's come up recently, obviously national statistics, that taking the Band D level, West Devon residents are the 9th highest council taxpayers in the country. You talked about value for money in your section, but this wasn't referenced. I'm surprised.
We actually look at our value for money conclusions on the arrangements the council has for affecting things. The level of council tax is a consequence of the funding of the council, and not really within the arrangements. The risk we identified was whether or not the council could sustain its finances going forward. So it's not really about the comment on the level of or comparison of council tax across the country.
So it's not a value of money for its residents, in effect. It's a sort of effectiveness, would you say?
Yes, it's around the arrangements for effectiveness rather than benchmarking council tax or even spending.
Right. Yeah, it just might be a slightly misnomer there in the description. Okay,
we're aware that the value for money that title causes some consternation.
Okay, maybe Chair, that might be a comment for future that we look at a more suitable naming so the public not all.
We're given that naming. The new arrangements might look at it slightly differently, but we have to call it a value for money conclusion.
Fair enough.
Yeah, I think it's one of those, Councillor Ridges, I think that's one of those points at this point I think comes up every single year actually for the confusion in the description. If a layman's actually reading it through, what does that actually mean? And actually what the sort of most people think it means, it doesn't mean. So
yeah,
we can understand that, but we actually, as it said, we've been given that, so we can't actually amend that. Councillor Ball.
Thank you, Chairman. I'm sorry about my hokey-cokey sort of connectivity. For some reason, the machine logged me out and I couldn't get back in. Mr. Gardner helped me get back in. I've got a question, and I apologise if you covered it while I was disconnected. But on page 6, at the bottom of page 6, talked about rebutting the risk related to improper revenue recognition. And then there's more about non-rebuttal on the next page. 2 questions. Could you just clarify what that actually means, please? And secondly, what's the relevance about it in relation to that improper revenue recognition? Thank you.
Okay, revenue recognition is a mandatory significant risk for all audits. In that it's critical that we ensure that the revenue is recognised in the right year in the accounts. We're able to rebut that, i.e. reduce the amount of work we need to do around that and testing, because most of the council's income is predictable. You understand council tax and MDR is actually contained within a year. There is no scope for deferring it to the following year or bringing it forward from next year. Therefore, we're able to rebut that and reduce the level of testing that we can do on that. But we do have to set that out in the report.
May I follow up, please, Chairman?
Yes, you can. Yes.
Thank you. Yeah, that's really helpful. So just for clarity, to make sure I've understood this. So because, or no, let me say it a different way. So if we had sort of a lot of different sorts of investment, things that we're relying on income, that would increase the risk, and therefore you know, the response might be different to that. It's because we've got because we're relying on the income that you listed there, and it's a known income, almost pretty much set over the 12 months, means that risk can be put aside in one sense.
Yeah, the only element of risk that remains for council's income is normally around fees and charges. And we do work on the cut-off to make sure that that's included within the right year. But that is the one area that we do need to look at for that revenue recognition.
Thank you.
Okay, no other questions at the moment from members, but I've got quite a few questions, if you don't mind,
Okay.
and whether these are to yourself, Jackson, or Steve, or even to our finance team. But I'll ask them and we'll find out. On our page 8, which is your page 6 of your report, under findings, it says we recommended that the council enhance its disclosure around the going concern and the impact and response to the economic difficulties created by the COVID-19 pandemic. Has that actually been done? Because obviously reading through the accounts, etc., there's lots of references to COVID, but when you actually say that you put a recommendation that the council enhances its disclosure, have we done that? Has that been done?
I can answer that question, Chairman.
Thank you.
Yes, so on page 130 of the accounts, it's in note 41, the critical judgments in applying accounting policies. We've put some extra text there to say that there is a high degree of uncertainty with regards to future levels of funding for local government, that we are awaiting the comprehensive spending review announcement from the government, which at the moment should be a 3-year announcement covering 21-22 to 23-24. We also talk in that note about the postponement of the fair funding review, the resetting of the business rate baseline, and the impact which COVID may have on our income streams. And then there is a section which says, with regards to the Section 151 officers, myself's management assessment, taking in view the level of government support, the level of our reserves, the level of working capital, so things like cash and investments, sensitivity analysis around our income streams, taking into account things like income from taxation, so council tax and business rates. We have no material uncertainty, and therefore the accounts have been prepared on a going concern basis. So that's set out in that critical judgments note. We also refer to it in the narrative report as well. So we have put 2 extra disclosures within the accounts following the feedback from the auditors. Thank you, Chairman.
Thank you very much. Okay, just bear with me a little bit, actually, because I'm trying to monitor different screens here, but as well as look at the accounts. On page 7 of the actual report, it highlights the significant audit risks still, and it raises concerns over control recommendations, which are then picked up again in on page 24 of this report regarding the journals, where we have a red item, which is high, which is journals over £25,000 have to be checked by a second individual, and certain journals had been omitted and had only been reviewed. I think that some had only been reviewed sort of 3 months later. Has this been changed following the audit risk being highlighted?
I can answer that one, Chairman. Yeah, absolutely, it has been. Just a bit of background, really. As part of our management controls, the finance business partners review all our journals over £25,000. At the start of the year, the journal report was still looking at the old year while we closed the account. So any new year journals in months 1 to 3 were omitted, unfortunately. So we have now addressed this issue going forward. We've redesigned the report, and it will be a cumulative report looking at both years at the same time to ensure we pick up all journals in the future. And I can also confirm that we did do a exercise to review those few journals that have been omitted from the report, and I can confirm there were no issues with those journals. Thank you.
Yeah, thank you very much, Pauline. I've got a few more questions, but Kevin, Councillor Ball's got some questions, so we'll go to Councillor Ball. Are you there, Councillor Ball?
I think you're still on mute, Councillor Ball.
No, the window changed. Well, just as I was trying to turn the mic on. Thank you, Chairman. Well, I had two questions. You just asked my second question, which was relating to the journals. The other question I have relates to comment on page 14 to do with bank reconciliation. What's the significant issue for us with that? And is there, what's in place to kind of work through that?
I'm happy to take that one again, Chair, if that's okay.
Yes, please.
Okay, so again, sorry, a bit of background information. The 69,000 relates to a historical reconciling item from 2017-18, when the year end fell on a bank holiday. The cash was posted correctly to the cash receipting system and to the feeder systems, but unfortunately it wasn't posted into our general ledger, so into our mirror cash. And due to the format of the bank reconciliation, it wasn't immediately apparent, and it's something that's been picked up during the audit. So we have addressed that going forward. We will change the format of the bank reconciliation to ensure that doesn't happen again. It was a one-off, and there haven't been any other historical items, so it is a one-off, and we will adjust that through our accounts in this current financial year.
Thank you, Pauline. That's great.
No problem.
Any other questions, Councillor Ball?
No, I'm good. Thank you, Chairman.
Okay, and you actually answered one of my questions. You asked one of my questions then. So, okay, I got another one. On page 11 of the report, significant findings, the penultimate paragraph says the council did not include the disclosures on the issue within its key judgments and material estimates disclosure in the draft statement of accounts. This is concerning investment properties. Has that now been done?
Yes, it has, Chairman.
Okay, thank you. It's a nice, easy one. So I'm going to have to scroll down a bit now. Right, okay, yeah, this is concerning on page 23 of the, well, our page 25, but then page 23 of the actual report. This is the action plan where it's a medium yellow, value for money, which has sort of been touched upon already. But just covering the shortfall and looking at the use of reserves, I know we report basically well, reports go to Hub monthly. There's also the I'm trying to think of the name now, the Financial Stability Working Group, which looks at these things. Is there anything else we need to monitor as a committee on this one?
No, I think we're concluding that you have a very robust system for reporting your financial position and addressing shortfalls in funding going forward. So I don't think we were highlighting anything additional that we thought the council should be doing. Clearly, it's something you need to keep under observation, and you are doing through the constant reporting.
Fine. Okay. One other one on this one. Obviously, it's very difficult when you're just looking at your own accounts and not other councils as well. Yeah. But on the basis, it's taken me about 6 hours, probably all of us, about 6 hours to read through these accounts, or this agenda, sorry, before. I don't intend to read through anybody else's, but I noticed we've gone from green to yellow. Has every council gone, in your experience, gone to yellow, or?
I ran just around that recommendation.
Right.
Yeah, that's not a grading of the council so much as a grading of the recommendation.
Fine.
So we don't consider it all fine and low risk. Obviously, you need to continue that close scrutiny going forward, but we haven't highlighted it as a red risk from that point of view.
Fine. Okay. So I've got another question, which is on page 24 of your report. We've already covered journals, so on to debtors and creditors, and the council subsystems and the parking fine system, because obviously we operate on a real-time basis.
Yeah.
Do we have any issues here that we need to know about, or is everything likely to be all sorted out for next year?
No, I think this was an area that gave us considerable difficulty, because we need to know the position at the 31st of March, and the systems, as I understand them, being real time. If you don't take that list at that point, you can't retrospectively recreate it, which meant when we were trying to do our testing, it involved a lot of work from our side, and even more work from your officer's side, to try and get to a position where we could see exactly the position of debtors and creditors at 31st of March. And I'm sure Pauline will pick this up in a minute. It's, as I understand, to be put into the close down timetable that those reports are run at the 31st of March next year.
Fine. Okay.
I'm happy to just come in if that's okay,
Yes,
Chair.
yes, please. Yes, please.
Just to reassure members, this is only our peripheral feeder system, so it's not our main feeder systems. We absolutely run those reports as at the 31st of March. We haven't been asked for this information before in terms of our peripheral feeder systems, so we'll absolutely make sure in future that it's on the work plan and we have that information available. It was just really difficult to go back retrospectively, so yeah, shouldn't be a problem in the future at all.
Okay, thank you. I've got one final question, which is to Grant Thornton. So basically, as a council, we've got a good report in front of us, but as a comparison, how do our accounts reflect in comparisons to other councils? Is this a sort of a satisfactory outcome, or is it a good outcome? Where are we really? Can you say that?
Sorry, you go ahead, Jackson. Yeah.
I was going to say, yeah, I think it's a good reflection. I mean, overall, what we're saying is you've got a clean audit opinion on both the financial statements and the value for money conclusion. So that's the headline message, that we've not raised any issues. We would always expect to identify some areas of adjustment or challenge of management throughout the audit. If you look at the areas that have been adjusted, the majority of those relate to narrative disclosures more than anything. So very few of them relate to financial changes. And the one area around the CCLA investment, as Steve said, that's a technical accounting treatment difference of opinion, but actually in the grand scheme of things that doesn't impact upon your general fund. So it's quite a technical accounting issue. That's the only area that we've identified in terms of a value. That's that on the bank reconciliation. I think overall this is a good audit report. There are recommendations, again, we would expect that, but there aren't pages and pages of audit adjustments. And I think also the fact that we're kind of virtually sat in front of you today, middle of October, with an audit, albeit there are still a few things to finalise, but an audit that's largely completed, again, is kind of testament to the officers who've been supporting us through this. I mean, we started the audit back in June, so in a normal financial year, if it had taken us 4 or 5 months to complete the audit, we'd probably be suggesting that something had gone fairly wrong. But I think in current COVID situation, that's a good result. Would be my reflection. I don't know if Steve, you were going to say anything further or anything different.
No, I think that's fair to say. There have been difficulties that we've had to overcome through that, delays created by the fact that we're not on site and not working alongside your officers. That's to be expected. I think journals and debtors and creditors have been particularly problematic, and that's something we all need to learn from going forward. But the report that you've got there is probably as good as it's going to get, to be honest. There are areas, as we highlighted in the audit plan, where we needed to put more work in this year, and that's been compounded, particularly around pensions disclosures with the triennial and the COVID uncertainties. and to come up with so few significant adjusted or unadjusted errors is a good result. The CCLA investment was highlighted last year in last year's report as well. So that's not a new issue, it's an ongoing issue, and if it's the same next year, it will be in next year's report if we're still disagreeing. So on reflection, I would say it was a good report.
Okay, thank you. Because it's always awkward whether, for us as an audit committee to know whether we've got a satisfactory report or, as far as you're concerned, or a good report, because we've got nothing to compare it against apart from asking you the question. I mean, these are very difficult times, as we know. These are testing times, and I think based on the basis that our external auditors just quoted as good as it's going to get, it's pretty impressive. So I think on that basis, I'd like to thank Lisa, Pauline and Alex and the finance team for doing an exceptional job under very difficult circumstances, and so well done. So Lisa, if you can feed that back to your team, I'd be grateful.
I will do, Chairman. Thank you very much.
Okay, so the item number 5 was the what we've just gone through, and it's for us to note the findings. Are we all happy? Well, basically, is anybody not happy that we don't note the findings? That's probably the easiest way to do it. There's no comments come up, so we'll note those. Thank you very much, Jackson and Steve, for your presentation. Moving on to item number 6, Grant Thornton report. So it's Grant Thornton again, informing the audit risk assessment for West Devon Borough Council for 2019-20. So back over to you.
Yeah, thank you, Chair. I'll take this one. So a fairly short intro from me on this one. This is coming to you slightly later than potentially it normally would have, due to some of the meetings that got cancelled in respect of COVID. So our auditing standards require us to make a number of representations, ask a number of questions of management as we're completing our risk assessment, and we're also required to ask questions of those charged with governance, and those charged with governance is the audit committee. So what this document is all of those questions that we're required to ask under our auditing standards, and management's responses to those questions that were provided to us as part of our risk assessment. The reason they're coming to you as is in your role as
we're losing you a bit there, Jackson.
Governance.
Yeah, you're fading.
Can you hear me?
You're fading.
You can now,
Sorry,
yeah.
do you want to take over quickly, Steve? Do you want to take over quickly, and I'll try to sort my internet connection out?
Yeah. So yeah, this is where we have to make certain requests, and you will have noticed as a committee in previous years we've asked for a letter from you as chair of the audit committee on behalf of the audit committee, just saying that you are aware of certain fraud arrangements, and whether you'd been aware of any frauds that had actually happened. That's been expanded under the revised approach to cover lots of other areas, and we've wrapped them all up into this document, which we've asked management to respond to. And what we're asking is that's then brought to you as a committee, so that you're aware of what management are saying is in place within the council. So it's for you to comment if you're surprised at anything or you disagree with anything in that. As Jackson tried to say, we would normally bring that through early in the year. And in fact, it was being prepared for the March committee, but because of delays, cancellations, and what have you, it's only coming to this committee. We've used the information that was in there to plan our audit, so it's there for your information and for you to comment on if you need to.
Okay, so just for members of the audit committee, so it's anything you don't agree with, don't recognise or don't understand. If you have any questions, now's the time. There's no questions coming up. The only thing I did observe, I did nothing to do with management response, but just on it's page 40 of our agenda actually. It says under the general inquiries of management, question 4, it just says are you. So it should be are you. It's just a typo there, I think. So just not an issue because it's not concerning the response, but I thought I'd point that one out.
Okay.
So if we have no questions, that's for us to note this one. So again, we'll note it unless I can see anyone who's not happy with noting it. If so, make a comment. That's good. So it's noted. So thank you very much for presenting that one. Staying with Grant Thornton, we're going on to item number 7, which is the COVID-19 and local government report, found on page 65 of the agenda.
Okay, I don't think Jackson's back with us, so I'll carry on. This is just a for information really on where the sector is in terms of the COVID response, and I suppose what it does is allow you to compare where you think you are as a council against other councils. It has moved on. This was our at a point in time, but I think it just highlights that councils are facing difficulties, which isn't a surprise, and that's going to continue as long as it continues and until recovery is fully in place. I think we'd just be happy to take any questions if you've got any questions around it, to be honest.
Well, I've got one question, which really, well, I suppose it does fit into this section of the report. It's just that the Chancellor last night announced an extra £1 billion worth of extra funding for councils. This is the 4th tranche of funding. Do we know, whether this is for you, Steve, or for Lisa, do we know at this stage whether we're likely to get any money out of this?
I think that's a question for Lisa.
Thank you, Chairman. Yes, I'm happy to answer that question. So yes, the Chancellor did announce yesterday that there will be an additional £1 billion of financial support for councils, and that this is on top of the £5 billion that's already been allocated to local authorities through the first 3 tranches of COVID funding. So as far as we know, this is additional money. It's a 4th tranche of COVID funding, but we haven't had any information yet from government about what this funding will be for, whether it will be ring-fenced, and indeed how much allocation each council may have from that £1 billion. So we are just awaiting some sort of announcement from government around that. So like I say, we don't know what the purpose of that grant is going to be, and whether it's an unring fence grant as well, or whether it will be directed towards area with higher infection rates. So until we've got something from the government on that, we won't know what our allocation of that 4th tranche is. But as soon as we know, we will send information out to members on that. There has, in addition to that, been a 30 million allocation from government nationally around improving compliance and enforcement for COVID, and we have received an allocation of just over 25,000. It's £25,512, which we've just been notified of. So that's a recent announcement that's just come in. Thank you, Chairman.
Thank you. Yeah, my concern obviously is that all councils, of course, are struggling financially at the moment, and I'm just concerned that the government might allocate it to those who are heavily hit with high COVID numbers, and leave us in the rural communities high and dry, although we've already got the costs to go with it. Councillor Vachon.
Thank you, Chair. Just an observation on this, really. Under scenarios and hypotheses, obviously the reasonable worst case and reasonable best case examples there. I mean, one which is going to affect us greatly is obviously the fourth one down there, which is the political and regulatory control by the central government on what we can and can't do. I think it's a bit like walking on blancmange during this epidemic, because nobody knows where it's going to go. And the reasonable best case, I think, obviously, is the local government empowered as leaders of place-based recovery, and I think that's really what we should be lobbying for, that we do have more control over this. It's my concern that certain government reforms are being pushed on us, which is making it very difficult for us to continue on a local basis. Thank you.
Thank you. Yeah, I find it interesting in the report where it said some councils are now more confident than others to manage 2020-21, but all are concerned about 2021 and 22 and beyond. I think we as a council were obviously quite concerned about our finances before COVID, so now we're obviously very concerned, but it would be nice if the government could do something if all councils are worried about 2021, 22, it'd be nice if the government could offer some reassurance, but I don't think that's going to happen. Okay, do we have any other? Sorry, Councillor Renders.
Sorry, I was just agreeing with you there, Councillor Davis, Chair. That was all.
Thank you. Okay, so there's no other questions on this. We just have to note the COVID-19 and local government report. So unless anyone objects to it, we'll note it. Okay, that's noted. Staying with Grant Thornton for item number 8, which is the local government audit and financial reporting, the Redmond review.
Yeah. I can only apologise, Chair, for the weight of reports that we're bringing to this meeting, but we thought that this, along with the COVID one, was quite important for the audit committee to see. The Redmond review has obviously been a hot topic since last year, and he's now made his recommendations and to go forward. Again, this report is for information on where we are with the position of audit, and the recommendations on the agenda, page 76, are the key things. He's recommending a new regulator, not to be called the Audit Commission, for those that you've been around for a while. That it's recognised that audit fees have been reduced to the point where that they're almost becoming impossible to do the audit, particularly with the increased expectations put upon auditors. They're going to move. He's recommended that the September deadline, the July deadline, be moved to September permanently. This year, as we know, it's November because of COVID. The expectation would have been that it went back to July. He's recommending that goes back to the previous deadline of the end of September, which gives us some extra time to prepare your officers to prepare the accounts, and some extra time for us to audit those accounts. So I think we would all welcome that. The timescales were getting very, very tight on those. He also recommends, and I'm not sure how successful this will be, that SIPFA look at the simplifying the accounts. I can't remember how many pages you've got in the accounts, but it's above 130, I would imagine. Which is ridiculous when you look at a set of commercial accounts, which would be 40 pages probably, including a very long narrative report. So he's recommending that that SIPFA look at simplifying the reporting of that, and looking at the role of governance and the reporting of that, which links in somewhat to the new VFM arrangements, but I'm sure we'll hear more about that. So again, you've had the report. If you've got any questions, I'll try and answer them, but it is still early days for this.
Okay. Okay, I'll start off then, because basically it says the system is not working, audit fees aren't high enough. So I wasn't surprised that your recommendation was that this is a really good report. But coming from a sort of an auditing background myself, although it was many years ago, most auditors tend to work things out well and truly in advance. How much? I'm sure you've worked this out, but then maybe you're not allowed to say, and it's a shame that Jackson's had to leave us, and I know he had to go to another meeting.
Chair, I'm back.
Oh, he's back, are you? Oh, it's good then.
Bad timing, Jackson.
Bad timing. So, you know what I'm going to ask you. So how much do you anticipate your fees going up by?
So I think in the Redmond report, he quoted a figure of about 25%. So we don't know what the fees will go up at the moment, and clearly that's a recommendation, but that was the figure that Redmond quoted when he compared audit fees in the corporate world and the world of kind of central government audit as well, compared to that of local authorities. So the 25% figure was what was quoted.
Right. Okay. Councillor Ball.
Thank you, Chairman. So I suppose by definition this would have to be considered as a risk, wouldn't it, with bringing change in again? Sort of a bit tongue-in-cheek, but much of this, reading through this, much of this kind of makes sense. Obviously, I kind of understand that sort of to do the job, it's a very, very particular skill, and that should be paid for. But I suppose, if the 25% that you cited is the ballpark figure, that's quite a substantial increase to us as an authority to find, I guess. I'm not making a complaint; it's just a comment. I think the September deadline is probably the most sensible thing in here. I was on audit when it changed, to the summer, and it put a lot of pressure on the team. I know, so that seems sensible. I'm just reminding myself. Just been flicking through it, reminding myself. Was there any indication in here about changing auditors? Because that was obviously something that came in, wasn't it? That we had to change periodically.
Yeah.
Is there anything about that? So obviously there's a whole thing about change, which inherently is a potential risk, which is a bit tongue in cheek, but is there. And then the second thing is about whether there's a continual change of auditors, and the comment on that. Thank you.
Yeah, sure. So if I take that second part first, in terms of change of auditors, so one of the recommendations, and apologies, I missed the start of this agenda item, and apologies, I cut out as well. So Redmond's review had 23 recommendations in it. So these aren't all the recommendations. These are some of the high level messages. One of his recommendations is around the establishment of a new regulator called OLAR, the Office of Local Audit and Regulation. And one of their roles will be the appointment of auditors. So as you're probably aware, the majority of councils, after the abolition of the Audit Commission, chose to go through public sector audit appointments to procure their auditors. Redmond's review is that PSAA and various other organisations are kind of taken into a single organisation who would be the new regulator, but also look at the award of contracts. So they could impose change and rotation requirements internally. So if Grant Thornton are your auditors, internally we have ethical limits on the amount of time that both Steve and I can be your auditors. So at the more senior levels of the team, both as engagement lead and audit manager, there are set time spans that we're able to work on the audit before we ourselves have to rotate off, to ensure that we don't become too familiar and some of the other ethical threats are mitigated. So yes, there will be changes, or there could be changes, but that will be up to the new Office of Local Audit and Regulation in terms of who it procures to complete the audits. Even if your auditor were to be for Grant Thornton for the next 20 years, both Steve and I would have had to have rotated off the audit well before that 20-year period to ensure that there is some kind of new faces and a new look at some of the areas. I agree that change is always, as you said, kind of tongue-in-cheek or not, change is a risk as well. I think this report was commissioned because it was clear over the last 1 or 2 years that things weren't working as they should, that the audit market was becoming increasingly fragile. Audit in general was seen as a less attractive career, publics or local audit perhaps even less so. So there was a recognition that in a few years there could maybe not be any local audit, and local audit is so important to governance and accountability that that's one of the reasons this review was commissioned. Some of the other recommendations that may not necessarily be in that report, but are important to you as a council and to you as an audit committee. So there's a comment around strengthening governance, and that's one of the key kind of threads that runs through Redmond's report. So parts of that would be formalising meetings for audit and the chief executive. We obviously meet with Lisa regularly to discuss updates, but formalising and ensuring that there are meetings with chief executives and other key people within the council. Annual reporting to full council. So the report that we've just presented, not necessarily that one, but the new, I forget the title he gives it, but the new summary report, we as external auditors would attend full council annually to report that to full council rather than just reporting through the audit committee. And one other recommendation, particularly important to the audit committee, was a recommendation that audit committees should consider or should appoint an independent member to sit on the audit committee as well. So there's a number of other recommendations that Redmond makes. Clearly they are just recommendations. So consultation comes next. Some of these areas would require legislation, and clearly there's a lot of other things going on for the government at the moment. So how forthcoming legislation in some of these areas would be, I don't know. As I said, they're recommendations, but this is the start, I suppose, of the next debate of what does audit look like. If you want to read it, it's 83 pages long, so settle down with a cup of tea maybe, because it might take a little while. But as I said, there's more recommendations than potentially just set out on those summary slides. But this is maybe the start of some of the conversations around these areas. Some will, as I said, need legislation, some will need various consultation, and others may be left down to local decision.
Okay, thank you. Councillor Yelland.
Yeah, thank you, Chairman. You sort of indirectly, I think, answered my question. But sort of just for clarity, I will still ask it, just to be on the safe side. With regard to these recommendations, which you're obviously talking about a lot more of them than we can see here, what would be the anticipated time frame then before they became effective? Would we have any idea? I mean, some of them are obviously going to be very a direct impact on the council in terms of fee structures and those sorts of things, which we need budgeted for and allowed for, and the rest maybe some indirect. But I'm just wondering, if we've got any idea of timeframes on any of this.
Yeah, sure. I mean, given the recommendations, a number of them, I would expect some of them or a number of them to come into force for the 2021 audit year. So some of the things like annual reporting, some of the meetings, fees you've mentioned, the timetable of audit. I think we, as an audit firm, and you mentioned earlier, one of the councillors' members mentioned earlier, the change back to 30th of September, I think probably would be welcomed by ourselves. But things like that would require legislation because they're included within legislation, and that date is included there. So how quickly or not that would go through Parliament, I don't know. Similarly, I think the creation of the Office of Local Audit and Regulation would require some legislation, I suspect, to create that body. And I suspect there's other more pressing areas. My understanding was that the audited and reconciled account summaries, so the additional document that Redmond recommended, which would need to be audited, but would also need to be produced by your finance team as well. So creating more work for both of us rather than less. My understanding is that at least trials of that are going to happen next year. I'm not sure I think the idea is that the document is produced but not necessarily audited was what I heard on a call with Redmond, but that may be different again. So in short, I would expect some of these recommendations to come in for next financial year.
Just picking up on the extra recommendations with extra statements, I see there was a statement for that we would have to make an extra statement to add to the accounts to explain how we performed against budget. I just wondered what you thought about that, because in a way we already do that in a narrative which is included within the accounts, and aren't we? As Councillor Vashon has said in his comment there, we're trying to simplify things, but in a way we're actually adding to the work, are we not?
Yeah, I would probably agree with that comment if I'm being honest. And I understand the principle behind it, because realistically, if you look at West Devon's accounts, let alone any other, and all other local government accounts, they're often over 100 pages, some are over 200 pages long. The layperson on the street, so an elector within the area, isn't realistically going to pick up that document. It's not by its nature an easy to understand and read document. So clearly Redmond is trying to allow local electors to understand the financial position of their authority a little more. But I agree that I think you're correct. Is probably my summary. The reconciliation to budget, that's already included in the narrative report, and there's also a kind of a budget report that would go through council or cabinet and be reflected through the financial statements. So I'm not sure that adds a huge amount, and kind of anecdotally, I think that's the feedback I've been hearing elsewhere as well. That some of the recommendations may be welcome. This one's one that people are maybe trying to understand a little more. And Redmond also produced examples of what that may look like, and I think other areas and other local authorities are kind of questioning some of those examples as well. So that would be my personal view rather than a Grant Thornton firm-wide view, but I can absolutely see that argument being made. Yeah,
thank you. I can't really answer on behalf of the Lisa and the finance team, but I'm sure pushing the deadline back to the 30th of September would receive our support, but I'm not too sure about actually providing extra statements against providing the things which are already included in the narrative of the accounts. You got any comment on that, Lisa?
I'd agree with that, Chairman, and we would certainly agree with moving the deadline back, because I think 31st of July was unachievable nationally. With regards to having an extra statement in addition to the accounts, we wouldn't be supportive of that. We feel that information is already in our narrative statement. That would be extra work for the team, and we can't see any additional value from that. And if it has to be audited as well, we feel that's already covered within our accounts. So the conference that I was on where Sir Tony Redmond did present that, I think there was quite a bit of pushback around that additional statement, and was there a need for it, or should there just be some further clarification of what's expected in the narrative report, and just make sure that everyone's including the same sort of information in their narrative report rather than another statement to go with the accounts.
Yeah. Okay, thank you. Councillor Vashon, would you like to expand upon the comment that you've made?
Thank you, Chairman. Just a bit of a tongue-in-cheek response there. I think you actually got an answer to that in your last question. I just felt it just needed asking the question. But I think, in my experience, anything simplified actually takes an awful lot longer nowadays. And I think the answer that you got has just proved that. Thank you.
Right, thank you. Okay, there's no other questions or comment. We have to note the report on the financial on the Redmond review. So again, we'll take it as noted unless anybody puts an objection in the notes or the comment section. Okay, that's noted. So thank you for that. Moving on to item number 9, which is the audited statement of accounts 2019-20 and the annual governance statement 2019-20, including letter of representation. I shall now pass over to Councillor Edmonds to present this.
Thank you, Chair. The Council Constitution delegates approval of the accounts to the Audit Committee, and this report recommends that members approve the audited statement of accounts and the annual governance statement for the year ended the 31st of March 2020. The report further recommends that members approve the wording of the letter of representation, which is attached to this report, for signature by the Chairman of the Audit Committee and the Section 151 officer. The report reminds us that the Statement of Accounts is an essential feature of public accountability. It provides stewardship. It provides the stewardship report on the use of funds raised from the public. The closing of accounts is also important to the budgetary process, since it confirms the availability of reserves and balances for future use. The underspend on the general fund in 2019-20 of £133,000 has been earmarked as one of the 5 options approved by members to address the 2020-21 budget shortfall. Grant Thornton have already mentioned valuations this afternoon, and Section 4 of the report set out the impact of COVID-19 on the valuation of the Council's property, equipment and investment properties. Valuations are reported based on material valuation uncertainty, and as we've heard, this is a national position and is likely to affect all councils. Values in the 2019-20 Statement of Accounts have been based on the situation prior to COVID-19, on the assumption that values will be restored when the real estate market becomes more fluid. Turning now to the annual governance statement, Appendix C, which confirms that the Council has carried out a self-assessment of the extent to which it complies with the 7 core principles of good governance. To ensure continuous improvement of governance arrangements, an action plan has been drawn up to enhance performance in the areas identified from internal control systems and the SIP for guidance issued on the 7th of April 2020 relating to the coronavirus pandemic. The details of the action plan can be found on page 156 of your agenda papers. As we have heard, Chair, Grant Thornton anticipate issuing an unqualified value for money conclusion, subject to finalising a few outstanding points. They have concluded that the Council has proper arrangements to secure economy, efficiency and effectiveness in its use of resources. The report recommendations 1 and 2, which can be found on page 1, recommend approval of the wording of the letter of representation and audited statement of accounts for the year ended 31st of March. And although the number is missing on the report, recommendation number 3 recommends approval of the annual governance statement. And I would also like to thank Mrs. Buckle, Mrs. Henstock, Ms. Walker, and indeed all members of the finance team for their prudent management of the Council's finances. And on a final point, Chair, I would like to welcome Claire Scotton, who has joined the Council as a Finance Business Manager. Welcome to West Devon, Claire. Thank you, Chair.
Thank you very much, Councillor Edmonds. Do we have any questions, members? before we go on to my list of questions. Okay, I'll start with my list of questions then. In the pages 21, well, actually page 9 of the report, it says concerning corporate management, payment of collection and expenses, which is basically the credit card. We've got quite a movement here of 285% increase, which is the processing fees. I take it this is all to do with the fact that we've actually urged most people now to make payments by credit card. Is that right?
Yes, that's correct, Chairman. Yes, so we have an additional cost there of 20,000, and we've built that into our base budget for next year. So that's around our payment collection expenses. So we had a budget there of 7,000, so we've increased that in our base budget for next year.
Okay, thank you. Next, I'm going to go on to housing benefits, and I see we have a little bit confused here. We got overpayment of 80.7%, which is a bad debt provision due to COVID-19. So that's an increase in provision of 35,000. But then we also have income to offset against that, I believe, which is additional housing benefit administration subsidy of 32,000. Is that right? Does one get set off against the other?
Yes, that's right, Chairman. So the 109,000 is a shortfall in our housing benefit overpayment recoveries. So this is where a customer may have a change of circumstance. So they may be claiming housing benefit and their circumstances change. So, for example, they may change jobs or their hours change, if they're a seasonal worker, for example. And normally there's a time delay between us being notified of those changes of circumstances for housing benefit customers, and when we reclaim the housing benefit overpayment, we can also reclaim subsidy on that. So from that, we do actually get an income stream, and budgeted income was 135,000 in 1920. What's happened is now, because the DWP have got real-time information, there's a very short window now. Those overpayments of housing benefit aren't being created in the first place now, so we aren't seeing those overpayments, which is good news from a customer's point of view, because then they're not getting into a position where they're having to pay housing benefit back. But what we're seeing is we are recommending, and it is in the medium-term financial strategy, that we take that income stream out of our base budget altogether, because we won't get that going forward, because we've got real-time information now with the DWP, which is definitely better from the customer's point of view, but it does mean that we need to take that budgeted income out of our base budget. And yes, that is partly offset by the additional housing benefit subsidy. So that was 62,000. We've got budgeted housing benefit subsidy of just under 8 million, and we've also got additional housing benefit administration subsidy as well, which was the 32,000 in addition. So we show both sides. We show where we're not meeting the income budget, but also where we've overachieved on some of our budgeted income streams as well. Thank you, Chairman.
Okay, thank you. That was very well explained, actually. I've got some more questions, but I'll go over to Councillor Yellens next.
Thank you. Just it's on the same page. That's why I thought I'd dive in. Is under the customer first, where we talk about St James, Oakhampton, and budgeted costs, including repairs and maintenance, which are partly offset by a saving on Kilworthy. Talks about 25,000 unbudgeted costs. Now, I think my question really is, well, it's perhaps a bit bigger than, I'm not sure if it's one that Lisa can answer. It's when the office was closed, St James' office was closed in Oakhampton, it was because it was costing 80,000 a year to run, and it was going to save that 80,000. But it seems that it's still incurring year-on-year costs, which are what I would call quite high in relation to the original 80,000. And I was just wondering what the position and what was happening, because St James was supposed to be, the various schemes coming forward for how that building could be used, so it would cease to be a liability in essence, and doesn't seem to be the case. Are you able to help at all?
I can certainly get an update on that position for you, Councillor Yellen. Certainly with regards to last year's accounts, yes, we did have a small amount of repairs and maintenance costs. We are also we've still got the business rate liability as well, so we're still paying business rates on it. The last I remember hearing on it was I thought we did have a prospective tenant for that, but that was probably before sort of lockdown and before COVID. So I'm not aware if we've got any current future tenancy lined up for that building at the moment. But I do know that, you know, going back towards the beginning of this financial year, there certainly was some prospective tenants, but I don't have an update on that, I'm afraid. But I can certainly get that update and send that out to members.
Thank you.
Thank you. Okay, page 23, a question I ask every year, Lisa, for you, about Servco Limited, our dormant company. If you can just explain the costs associated with this and whether we need to keep the company open.
Yes, thank you, Chairman. So Servco is a company that was set up a good few years back. It is a dormant company at the moment, so we're not using it for anything. We don't incur any direct costs for having Servco. I literally spend about half an hour of my time each year just going onto the company's house website and filing a set of dormant accounts. It is something which we will keep under review as to whether we should formally close Servco down. As I say, it's never traded, it is just a dormant company. So we will keep that under review and think about that going forward, but it doesn't actually cost us anything as such, apart from just a small amount of officer time in my time in doing the dormant accounts, and also one of our legal specialists also files an annual return through Companies House as well. Thank you, Chairman.
Okay, thank you. I have pre-warned the finance team about my next question, which concerns election expenses, which is on page 30, because we set aside, I believe, £20,000 a year as a reserve to cover the elections. Of course, in May 2019, we had the borough, town, parishes in May, plus the general election in December, which I think used up most of our reserves on that, although we got 20,000 for this year. But of course, I am aware that next May we've got the Devon County Council elections plus the Police and Crime Commissioners elections. I just wondered whether, I did ask whether you could speak to the elections team, whether there's any anticipated extra cost due to COVID for cleaning the stations, etc., the polling booths, or even allowing for extra postal votes.
Yes, thank you, Chairman. Yes, we have spoken to Claire Chapman. We do think there will be additional costs with next year's election. So particularly, we're expecting there will be more postal voting. So we think that more people will want to vote by post, which obviously costs more in terms of printing and postage. And also from an officer point of view, more postal votes to open. So we'll need more staff to do that. With regards to the polling stations, obviously we will need PPE equipment, protective equipment for staff, potentially more staff in some of the bigger polling stations to police queues, ensure we enforce social distancing, guide voters, and also some online training for polling station instead of face-to-face. Obviously things around room hire, we will require to hire more rooms for the postal votes, opening and verification of those, and also when we count those votes we'll need to maintain social distancing. And again, with regards to the actual verification and the count on the day and into the evening, again it will be around protective equipment, PPE for staff. And in terms of the actual election staff, we'll need some additional help probably in the office to cope with the combination of elections which we will have. We think the cost of the combined elections will be largely recharged to the Police and Crime Commissioner Returning Officer, Devon County Council and various parishes who will be having by-elections. So yes, that's the information that we have to hand at the moment, Chairman. Thank you.
Thank you. Yeah, so we would hope that if we got extra costs enforced upon us for cleaning, etc., policing, etc., they would be somehow supported by the government with some actual additional funding.
Yes, that's what we are anticipating, or in many instances we will be recharging those additional costs on to either the Police and Crime Commissioner or Devon County Council. Okay,
thank you. My final question is page 76, section 28, which is members' allowances. I was trying to work out why there's been an increase from 206 to 220 in the column. But scratching my head about it, I thought it might be because part of the year we actually had the leader of the council was also the chairman of planning, so maybe in that case you can't claim two allowances. I wondered if that was the reason or there's another reason.
Thank you, Chairman. I just wanted to say thank you to Mr. White, who's looked at this for us before the meeting. So yes, it is partly that you mentioned, Chairman, with regards to the previous chair of the Planning Committee, but also there is an increase in the members' allowances on an annual basis, and that's in line with the increases with regards to staff. So any sort of staff pay award, the same percentage is also used to increase members' allowances. Is that right, Mr. White? Is there anything you'd like to add to that?
No, that's correct. Thank you, Mrs. Buckle. Just to reinforce the point that in our scheme of allowances, two of the main reflected roles, if you like, are the chair of DMNL and the leader of council. And as you said, Chairman, members can only claim in our scheme one allowance, which obviously tends to be the higher one. So now, because those roles have got two separate, in effect, post holders, that is reflected in that increase. Thank you, Chair.
Okay, thank you. So I was near enough right on that. I did wonder. So that's all I have for questions, unless any other members have any questions. Okay then, so Councillor Edmonds has listed 3 recommendations which I intend to take on block. As Councillor Edmonds isn't actually a member of the Audit Committee, he can't actually move them, so if I move them from the chair, the 3 recommendations together, can I have a seconder, please?
Happy to second.
Second, Chairman.
There's a few there, so I'm sure you got one of them. Okay, do we move into areas of debate? Any items for debate?
No.
No, thank you. So again, we'll take it as we'll all agree on that, unless I see any objections in the comments box. No, so those 3 recommendations are accepted. Thank you. Moving on to item number 10, the annual Treasury Management Report for 2019-20. Again, call upon Councillor Edmonds to present the 2 recommendations and the report.
Thank you, Chair. The regulatory environment places responsibility on members for the review and scrutiny of Treasury management policy and activities. This report provides details of the out-turn position for Treasury activities and highlights compliance with the Council's policies previously approved by members. On a positive note, income from investments in 2019-20 was £39,626 higher than the budget of £90,321 at an average return of 0.78 against a benchmark of 0.56. This is an excellent performance thanks to the close management of available investments on a daily basis by members of the finance team, which has generated the surplus. The total sum invested as at the 31st of March 2020 was £13.6 million. The Treasury management strategy is risk averse, with no investments allowed for a period of more than a year, and a very high credit rating is required, together with a limit of £3 million per counterparty. and a list of the institutions the Council can invest in is shown in Appendix A. The Council's total external borrowing on the 31st of March 2020 was £29.5 million. The report confirms that the Council has complied with the Treasury limits and prudential indicators set out in the annual Treasury strategy statements, and the Council's prudential indicators for 2019-20 are set out in Appendix B. The Council's capital expenditure plans are the key driver of Treasury management activity. The outputs of the capital expenditure plans are reflected in prudential indicators, and it is these indicators that assist members to overview and confirm capital expenditure plans. And finally, Chair, the report contains two recommendations. Firstly, that the Audit Committee approves the actual 2019-20 prudential and Treasury indicators in this report, and secondly, notes the annual Treasury Management Report for 2019-20. Thank you, Chair.
Thank you, Councillor Edmonds. Do we have any questions? Councillor Vachon.
Yeah, thank you, Chair. Again, it's me trying to verify something which I'm unsure of. Under the Appendix B, under the CFR box, we've got an item which says less MRP stroke VRP. I'm just wondering what MRP and VRP actually mean.
Thank you, Chairman. I can answer that question. So yes, I'm sorry about the acronyms. So MRP, that is it's minimum revenue provision. So basically, what that is on any borrowing, it's the repayment of the principal element, so the capital element, and VRP, it's the same thing, but it's just a voluntary revenue provision. So these are charges to the revenue account, which is where the RP bit comes from. But it's just a difference. MRP we have to charge, so there is guidance and national legislation around that calculation. Whereas VRP, it's voluntary. The council can make a voluntary contribution to pay some of that debt back. Some councils do that, for example, if they're in an instance whereby they've got they're able to, within their revenue budget, repay some of that funding. They can do so on a voluntary basis. We've never done voluntary revenue payments, so we only ever do the minimum MRP, the minimum revenue provision. But some councils do use VRP, and then in future years they can reverse that because it was voluntary. So, for example, some councils up and down the country that are setting an amended budget or an emergency budget this year for 2021, what some of them have done is use their VRP, so they've reversed some of their voluntary revenue provisions from previous years. We don't have that option, but just a bit of background really about what the difference is between them.
That's brilliant. Thank you, Mrs. Buckle. Much appreciated. I'm presuming obviously these figures here are MRP in that case.
Yes, they are.
Okay, thank you. Councillor Ridges.
Yes, question for Mrs. Buckle. How worried are you about negative interest rates?
I've heard lots of talk about negative interest rates. Obviously, it's sort of uncharted territory, and with base rates being, at 0.1%, that's the lowest historically they've ever been. We do tend to keep all our investments short, apart from the money that we've got in the CCLA, the $500,000. But yes, I mean, if it happens, we meet regularly with our treasury management advisors anyway. We meet them every 6 months, and if we did go into negative interest rate territory, we would obviously take their advice about where the best place would be to put our investments. and still bear in mind things like credit ratings. But obviously we won't be the only council in that position, so I'm sure our Treasury Management advisors would be able to give us some good advice around that sort of uncharted territory, really, of negative interest rates.
Thank you.
Okay, thank you. I have a question. Just trying to look at where it is now. Oh yes, page 93, proposed way forward, number 11, 11.1. The Council's Treasury activities and interest rates will continue to be monitored daily and appropriate action taken to mitigate risk whilst optimising investment return where possible. Fully appreciate that the finance team are under a lot of pressure at the moment, but when it actually says the interest rates are monitored daily, how do you do that?
I could take that one, Chair, if that's okay.
Thank you, Pauline.
Yes, so every day a member of my team looks at the interest rates. We get email notification, and then within the constraints of the strategy, they look at the best deal for the day, depending on the amount of cash that's available. Or on some days, we have to bring money back if we have to pay our creditors, for example. But every day, they look at the deals, how much we've got to invest, and what the best possible rate is that we can guarantee for that day. Be it money market funds or other investments, but strictly within our strategy.
So it is done daily. Okay, thank you for that.
Yes, it is indeed.
Thank you very much. Any other questions, members? So no other questions come up. Councillor Edmonds presented the report with 2 recommendations. Once again, as he's not on the audit committee, he can't actually move the recommendations, so I'll move those from the chair. Can I have a seconder, please?
I second that, Mr. Chairman.
Okay, so choose anyone you like from that one. Okay, do we have any items for debate on that? No. Okay, so we'll move in to accept the recommendations unless I see anyone with a negative comment in the comments box. No. Okay, so we'll the 2 recommendations are accepted. So thank you very much, Councillor Edmonds, for presenting the report. We move on to item 11, which is the Audit Committee Work Plan, to be found on page 103 of the agenda. Over to you, Lisa, please.
Thank you, Chairman. So yes, we've set out here for the next 3 meetings, November, February and next March. The items which we are envisaging will come forward to the Audit Committee for consideration. So in terms of November, where we've got the Grant Thornton update report, we will also be bringing to members the 6 monthly update on the Strategic Risk Register. And also the 6 monthly update on strategic debt review. So we will look at all of our debt balances at the 6 month stage, so end of September, and bring a report to members on that. We will also have Dominic's normal reports on the internal audit charter and strategy, and an update on progress on the internal audit plan, so the internal audits which have been completed over the last 6 months. We've also got an agenda item, and this is a new one, which is the investigatory powers inspection. So some members may know this as REPA. This used to go to the Overview and Scrutiny Committee, but I think it's felt that it more aligns to the terms of reference of the Audit Committee. So this is going to be on the Audit Committee's agenda for November. And we've also put on their discretionary business grants, because I think there was a request from members a couple of months ago if we could bring a report back to the Audit Committee on all of the a summary report of the discretionary grants which were given out by the Council over the last couple of months. So we've put that on the 17th of November as well, and those discretionary grants were all government funded, so that's where we were administering those business grants on behalf of government. February, we're envisaging a lighter agenda, but there may be things that come up between now and then that we would like to put on. So again, mainly regular update reports from Grant Thornton. We'll have the 6 monthly Treasury Management update on there, and again the internal audit plan for 2021, an update on progress. March, as you can see, is a as it is every year, a very long agenda. So we will have things like the draft budget book, the cost methodology for shared services, annual review of the council constitution will be on there as well as things like the debt review and risk register again, and also we'll have Grant Thornton's external audit plan for 2021. Thank you, Chairman.
Okay, thank you. A note that we did have a health and safety report previously. Could I request that we maybe include that for February to have an update?
Yes, certainly, Chairman. We will add that on. And presumably that will be a verbal update again, as Mr. Luscombe did previously.
Yeah, I appreciate he's very busy at the moment, but he'll probably be very busy in February. So verbal update's fine. Just
brilliant. Thank you.
I think it's quite important for the audit committee to be updated on health and safety within the council and certainly with the staff. Good.
Thank you.
Okay, do you have any questions, members? No, so we just have to note that one. So that brings us to the end of our meeting. So I'd just like to thank you all for your time and diligence in reading all the paperwork beforehand and then coming to the audit committee meeting. So I now close this meeting. Thank you.